Assalamualaikum and hi. Okay, so now we are going to discuss May 2022 Test 1. Okay, so the format of Test 1 for May 2022 is slightly different from the latest format of Test 1, where in the latest format you will have Part A, Part B and Part C. However, we can still use this question for our discussion because question 1 here is similar to Part C. Okay, alright, so let's start our discussion from the 2nd December here. Okay, so but before that, let's first read the requirement. Identify the effect, increase or decrease of the following transactions into asset, expense, equity, revenue and liability. So make sure when you write the answer for the effects of either increase or decrease, so make sure you use this accounting classification for each of the transaction. Alright, and then state the double entries, okay, of which accounts to be debited and which account to be credited. Alright, okay, so let's start from the 2nd December. So the owner deposited additional cash of 25,000 into the business bank account and brought in a motor van amounted to 60,000 into the business. Okay, so when the owner deposit additional cash and also motor van into the business, so what happened to the business? Now the business has a cash and also a motor van. So increase in asset for the cash and increase in asset for the motor van. So where this asset comes from? Okay, this asset comes from the owner. Okay, the owner contributed this asset into the business, right? So at the same time, we need to record, okay, the increase in the owner equity. Okay, when there's an increase in asset, you debit asset account. So which asset account to be debited? For the first one, cash account, yes. Okay, and the second one is motor vehicle. Alright, okay, and then for increase in equity, we credit capital account. Okay, we credit capital account. Okay, let's proceed to the 5th December. Receive check for interest from fixed deposit account of 1,000. So receive check, so meaning that you receive money. Okay, receive check. For what purpose? Interest from fixed deposit, okay, of 1,000. So whenever you receive money, there will be an increase in asset. Okay, at the same time, it is also increase in revenue because the money that you receive is due to the interest from the fixed deposit. Okay, so when you have here increase in asset, you will debit asset account, but which asset account to be debited here? So receive check, meaning that there's an increase in bank, in cash at bank. Okay, so we debit bank. Okay, and then for the increase in revenue, okay, we are going to credit the revenue account. So what is the revenue that we receive here? Interest from fixed deposit. So you may write it down as interest, as simple as interest received, okay, or interest from fixed deposit. Okay, right, either one. Okay, interest received or interest from fixed deposit. Okay, either one. Alright, okay. Okay, next, the business bought goods. Alright, again and again. Okay, whenever you find bought goods, okay, whenever you find bought goods, okay, this will result in an increase in expense. Okay, only for bought goods. Okay, increase in expense. Okay, so increase in expense, so you debit expense account. What is the name for the expense account when you bought goods? Okay, purchases, correct. Okay, next. Okay, how did the business bought goods? On credit. On credit, meaning that the business owe money to Samad Enterprise. So this debt need to be settled in the future. Okay, so there is an increase in not only in expense but also increase in liability. Okay, increase in liability. So whenever there is an increase in liability, you credit the liability account. What is the name of the liability account to be credited here? Due to bought goods on credit? Yes, payable. Okay, payable. Right, Samad Enterprise. Okay, very good. Okay, next. Alright. Okay, on 11th, sold goods to Samuel Trading. Okay, sold goods. Okay, like I always say, whenever you find sold goods, it means increase in revenue. Increase in revenue. Okay, increase in revenue, you credit revenue account. So which revenue account to be credited due to sold goods? Yes, sales. Right? Okay, and then when the business sold goods, the business received cash. Receive cash. So increase in, yes, other than increase in revenue, there is an also increase in asset. So increase in asset, you debit asset account. Which asset account to be debited due to this transaction? Cash. Okay, good. Right, next. On 12th December, the owner paid lunch for his family. Okay, so the owner paid lunch for his family at Kari Kepala Ikan Nordin using check from the business bank account. So this is a personal transaction. Okay, so this is the personal use of money. Okay, paid lunch. The owner paid lunch for his family. For his family, meaning that this is a personal transaction. Okay, personal use. Okay, personal transaction, personal use. Okay, so using the check, meaning that the owner took the money, took the business money. So what happened to the money? Okay, decrease. So asset decrease, sorry. Here, asset decrease. Okay, and whenever the owner took something from the business for personal use, okay, the equity of the owner also will decrease. Okay, the equity also will decrease. Okay, so for decrease in asset account, you credit asset account. So which asset account to be credited here? The owner took money, okay, from the bank using check. All right, so credit bank. Okay, in decrease in equity, you debit equity account. So which equity account to record the drawings by the owner? Okay, so drawings. Okay. Okay, right, on 19. Return of defect goods purchased on 7 December 2021 worth 500. Okay, so let's look at again the transaction on 7 December 2021. So on 7 December 2021, the business bought goods on credit from Samad Enterprise amounting 35,000. And then on 19, the business returned the defect goods purchased worth 500. Okay, so what are we going to do now is that we are going to reverse the previous transaction. When the business bought goods, it result in increase in expense, increase in liability. So when the business returned, okay, what happened is there will be there's a decrease in expense as well as the liability. Okay. So decrease in expense, you credit. Okay, what expense account to be credited here? Is it a purchases? No, it is a purchase return. Purchase returns, okay, or return outwards. Okay, purchase returns or return outwards. Okay, all right. Decrease in liability. Okay, you have to debit the liability account. So which liability account to be debited here? Look at again the transaction on 7 December. So on 7 December, okay, you credit payable when you bought the goods. Okay, so when you return, okay, you debit payable. Okay, you debit payable Samad Enterprise. Okay, and then paid electricity bills by cash. Okay, so whenever you pay the bills, okay, this will result in increase in expense. Increase in expense paid by cash, so decrease in asset. Increase in expense, you debit expense account. So just follow the transaction. Okay, if it is for electricity bill, then we open electricity bill account. Okay, and then for decrease in asset, you credit. So you credit cash because the payment made by cash. Okay, the business purchase display cabinet. Purchase display cabinet paid by check. So display cabinet here is not the goods for resale. Display cabinet is a resource used for the business administration, okay, for to generate the economic benefits in the future. Okay, and it is to be used for more than 1 year. So display cabinet is an asset. Okay, so whenever you see business purchase this display cabinet, so what happened? Now the business own a display cabinet, meaning that there's an increase in the asset of the business. And the business paid by check at the same time, there will be a decrease in the asset due to the payment, okay, for the display cabinet. Alright, so you debit display cabinet. So maybe we debit furniture. Okay, and then paid by check, so the asset decrease, you credit, okay, credit bank. Okay, paid stationery expense to Rahim store amounting 300 cash. Okay, so paid stationery expense result in increase in expense. In what way the business pay for the expense? Okay, by cash, so decrease in asset. Decrease in asset. Increase in expense, you record, you debit expense account. Okay, so stationery. Okay, stationery expense. You debit stationery expense. Paid by cash. Decrease in asset. You credit asset account. Account cash. Okay. The business bought new shop building. Okay, new shop building from Long One Property, paid using long-term loan from Bank Muamalat amounting 900,000. Okay, so here new shop building. Okay, so previously the business does not own any building. Okay, most probably. So when the business bought new shop building, meaning that there's an increase in the business asset. Okay, increase in the business asset. Shop building is an economic resource used in the business, okay, used by the business for the business administration or maybe for the production of goods or services, okay, and it is to be used for more than 1 accounting period. Okay, so this fits the definition of an asset. Okay, so increase in asset, and because of the purchase of asset is using long-term loan, so there is also an increase in the liability. Okay. Right. Okay, so increase in asset, you debit asset account, you debit building. Okay, increase in liability due to long-term loan here. Okay, so you credit liability account. Increase in liability, you credit liability account, and the name of the liability account is long-term loan. Okay, long-term loan. Alright. Okay. Alright, so that's all for our discussion of May 2022.